All right, let's see if we're working now. I should be live, I think, here. Let's take a look. Sorry for the technical difficulties. I believe we are uh, live, maybe not. Okay, testing, testing. Hello, hello. Looks like we're live, maybe. Is that correct? I guess there is a delay on the audio here. So, good afternoon, everybody. It is Wednesday, the 26th of January, 2011. Sorry for the technical difficulties. Send a complaint to the complaint department, which doesn't exist. So, anyways, if you picked your high for the year of 130 so far, you have 10 minutes to claim victory for the high for this rally. And I'm kidding, of course, because I've been getting a lot of people talking about the high and that we've reached a high a week ago, a month ago, 3 months ago, and that sort of thing. But we've been, persistently in an uptrend, and the only thing we have to look at really is price. That's not the only thing we have to look at, but that's where the focus of our analysis has to be. We've continued to, first we've been holding this rising 10-day moving average, then we had a couple tests of the 20-day moving average, and we're at new highs today. I don't know if that was a closing high at 67 cents. What was this high over here? It closed previously at 29.52. So I guess that was a closing high as well today. So on an on a daily basis, we're at new highs. On the weekly, we're getting up to these levels that we've previously looked at, and it continues to be potential levels of resistance, but not necessarily something that you want to run out and short the world in front of. We've got some earnings coming out from Netflix today. Netflix is one more company that's reporting earnings. We've had hundreds of companies report so far, and we've had mixed results. So I don't think you want to give too much emphasis to any one particular stock. The great thing about the market is that it's deep, and there's a lot of opportunities for leadership to reemerge from, and that's what we've seen, obviously, with some of these names like General Electric and IBM, that they're the ones that are leading the market right now, and that's what we have to stay focused on. So. Let's take a look back at that SPY. The SPY is let's see. Here we go. On the 30-minute time frame, we can look and we can see here that same pattern that we've been talking about is still in existence, which is higher highs and higher lows. We do still have a rising 5-day moving average, and we took out a little short-term resistance in here today. So probably actually a little bit easier to see on the 10-minute time frame that we had broken this level yesterday afternoon. The market came down to the bottom end of the range that we were in for this week, and we tested that bottom end of the range, rallied back to the top, gapped up today. And when we gapped up today, what we had occur, which was actually the setup that I was telling subscribers that we ought to look for. Let's use the Qs as an example, because that's what I was talking about more in particular, was this $56.50 level that we had rallied up to it yesterday. I said if we gap up tomorrow, that what we would want to look for is, first thing, a little bit of strength, pull back, and then as the market gets back up above the volume weighted average price, that would be the place to buy into such strength. And that's pretty much exactly what we saw here today. Let me get this out of there so it's not so distracting and we can focus a little bit better here. But we had gapped up, of course. Let's take a look at the 2-day chart. You can see that's the gap, so that's where we opened. And then focusing on today's action, we gapped up, pulled back, a little series of lower highs and lower lows on the 1-minute time frame. Then it got back above that volume weighted average price. The volume weighted average price began to rise, and that's where we saw really the strongest move of the day, and the market maintained above that volume weighted average price for the entire session. So right now, after hours, 56.89 is where the Nasdaq is trading. Let's take a look in at Netflix and see what we have happening there. Netflix closed the regular session at 183, and let's see, we've been all over the place here. So let's take a look at a live chart of that, and what we'll do is we'll just let's Let me move that out of the way. We're looking at a tick chart. What I'm going to do is just exclude the data before 3 p.m. Eastern time. And then we can kind of get a little bit better focused on this after hours action. So you can see we initially rallied up to 192, down as low as 176, and here we are up just a couple dollars. So if you like that kind of action, that's good. But right now as it stands, we are about 3.5 points higher than where we closed. A lot of people have been calling the end to Netflix, and Netflix has been in a very nice uptrend, and what we've seen recently is that the stock has turned a little bit more neutral. It's turned sideways, and it looks like we tested the entire range here, down to these lows of 173 and these recent highs of 196. So yeah, it looks like we're still within that recent range that Netflix has been in for the last 2 months. So unless you have a bet on earnings so far, then it's really, to me, it's irrelevant because I don't have a position in Netflix, but it might lend some strength to the market tomorrow. It's not selling off, and I think a lot of people were looking for it. Breaking an uptrend line, I talk about this all the time, and this is a good example for the market in general, I think, is that you can look at the market in general and say, well, it's similar to Netflix, that it's had these higher highs and higher lows, and some people correctly called the top there, or what was at least the top for back then. But the stock has been more neutral than anything. Look at how these moving averages are stacked up. Now you can get a couple days maybe where you can call the top in the S&P 500 like people thought they did over in here, but realistically we're still in that uptrend. We have the higher highs and higher lows, and the bigger concern doesn't come into the S&P till we get down to about 127.20 right now. So below 127.20, then it's time to get more defensive on the overall market. And if you're a shorter term swing trader in that, you want to look at some of these other levels, such as this resistance from yesterday at 129 and a quarter. Below that, then we've got 128 and a quarter. So those are important levels of support for the near term, and we've got potential to continue to run up towards these highs from August of 08 near about 132. So the market is in an uptrend. It's innocent till proven guilty, and same would be true for the Nasdaq. That the Nasdaq, it in this market too, you could say, well, did it? I guess it didn't break that uptrend line, but if you look at from these lows here, it pretty much. It held right at the 20-day moving average, and then again on that 10-minute time frame, we had seen here that this 56.45, 56.55 was the level for it to get above, and the market did what it's supposed to. When it breaks a level of resistance, it's supposed to go up to the next area. What you want to do, of course, though, is look at your shorter term time frames and say, okay, I'm not going to buy the gap. I'm going to wait for the buyers to regain control, and then set my stop underneath the low for the day at that point, or slightly below what which would have been right here, or slightly below in this area, wherever your risk management strategy tells you to. But it remains impressive. Today we had 2,100 advancers and 914 decliners. We absorbed the Federal Reserve meeting with really pretty limited volatility in there for a Fed day, I think. But again, the primary trend is higher, and that's what you need to stay focused on. It's easy during the day to look at this 1 minute chart and think, hey, we're breaking out, it's a big huge thing, or we're breaking down, time to get massively short. And you have to always take a step back and see how it fits into the bigger picture, which is what I like to kind of try to focus on here, is a little bit more of the bigger picture and making sure that we're not getting whipsawed and violently or frustrated from just trying to continually pick a top. The Russell 2000 has been the weakest group, as we know recently, weakest broad index. It came down. It held above the rising 50-day moving average. So this 50-day moving average takes on more significance now that we've kind of tested that level down near about 76.50. And today we saw the same thing in here, that this market got above, and actually I think it was this one. I said if the Russell gets above the the 5-day moving average that you could see a move for 79.50, and it didn't quite get to that 79.50, but I was talking about the convergence of the 10 and 20-day moving average. So basically, the Russell did what it was supposed to do as well. It gapped up, ran a little bit, pulled back, got back above that volume weighted average price, and just a beautiful move from there. So, you have to figure out how you want to play these things. When the primary trend is higher, you look at these pullbacks, and you don't want to buy the pullbacks and try to pick the bottoms. You want to wait for the evidence that we're finding support, that we're making a higher high, and we're holding prior levels of resistance. So now 78.25 becomes an important level for this market to hold, and we'll see if this market is getting back on track to continue to move higher towards to some bigger targets on the larger time frames. Maybe we're headed up towards these two levels here, near 83 or 85 in the Russell 2000. The semiconductors have been the real leader here, and they continue to be strong. This was the level that people thought was going to be resistance. Now we're looking at that 2007. Middle of the year pullback near about $35, and maybe we find resistance there, but to me it doesn't make sense to sell short there. We had the continuation earlier in this year of this powerful trend that began back in we could really say in September, but there's still no sign of topping in here. We've pulled back to a rising 10-day moving average, found support there, and we're chugging higher on the shorter term time frame. The financials were down 2 pennies today, but the uptrend isn't broken on a daily time frame in here. We still have this pattern of higher highs and higher lows. So now, the lows in here at 1620, if we break those 1620 support that we've seen in here recently, that is what would signal you to get a lot more defensive on the financials. But would that signal, hey, it's time to get aggressively short? For a day trader, maybe for some aggressive swing traders, I think you could potentially do that, but not. I don't think it makes sense to get aggressively short, particularly when we have the longer term still showing that maybe we're going to go test last year's highs up near $17 a share, and then the weekly time frame that says if we get above that $17 level from last year, that maybe it's headed up towards 18.5. There's it's just picking. It's a broken record here, but you can't. No one I've seen can pick tops with any reasonable accuracy or consistency, rather. The home builders up near highs as well. We've got you look at some of these other groups. The let's take a look at the XLE, the energy. Energy continues to hold this rising 20-day moving average as well, showing that it's a real leader in here, and it keeps testing that 20-day moving average. And whether they're sucking shorts in there or just people are looking to load up on energy, that's where it's finding the buyers. And as we break those resistance levels here, the shorts are getting squeezed and fresh money's coming in from the sidelines. So we've got a market that just continues to show a lot of leadership, and on an individual basis, there's going to be stocks obviously that break down. We'd seen that. Let's see, some of the solars yesterday. SPWRA is a good example. Where am I? SPWRA. This one looked like it was breaking past some important resistance, and then it completely caved in during the day on this SunPower. So yesterday, let's take a look at the weekly time frame, because the weekly time frame, it was looking like, hey, we're breaking a pretty important level here in SunPower, and perhaps it can go fill in this hole. And that's the right way to look at it, is that, hey, it's breaking out. Let's see if it can continue to move higher. So you look for the opportunity to buy strength in here. But then, as it broke down, for instance, yesterday below the volume weighted average price and then just got smashed, well, today continue to get smashed. It's a failed breakout. And from those failed moves, often we see the fast moves. What I had mentioned on Twitter earlier is, I said, what do these two stocks have in common, which were PWER. And PWER, let me just talk about this one for a second. This one's got some, I believe they're, solar related or something. They've got huge revenue growth and a big short position. I think there's maybe 36 million shares. Last quarter they reported maybe 300% revenue growth, and the stock gapped up. The shorts added very aggressively to their short position, about 8 million shares. It made you wonder, what do these guys know? Makes me wonder that. But then, as I was pointing out yesterday, I thought, now maybe's the time where these shorts are going to feel some pain. We can see that the volume weighted average price since that last earnings report has been down here at about $10.25. Well, if you look at the weekly chart, it still looks like it has room to run. And you bring up that short position with 36 million shares short, it makes you think either these guys really know something that the rest of us don't, or this stock is in a lot of trouble. That they're going to maybe announce some news. Well, when the stock looks like it's breaking out yesterday and had been breaking out on pretty good volume in here. That volume got skewed with the late day sell-off, but the same thing occurred here. The stock broke down below some VWAP and midday support yesterday and just got the shit kicked out of it on very heavy volume. And to me now it's a failed move. I don't trust this stock. They've got earnings due out, I believe, next week, and I think that the way it acts and the way that the shorts keep coming after this stock, that that they just simply will not allow it to rally more than 2 days. That they seem to think they know something, and I would be very nervous if I was long this stock. So I'm not long the stock. I actually made decent money in the trade yesterday, but I think it was, maybe a little too obvious, very similar to NG. NG, the obvious trade in here to me was, I was talking about, all the gold miners, and NGD, this is New Gold, kind of had the same type of pattern here. If you look at this level at about 875, and when it broke down, it really got hit hard down to 7.5 quickly. Well, NG was looking kind of similar. It was looking like, hey, all these gold stocks have been getting hit. Now this one looks like maybe it should get hit as well. Well, yesterday, in the last couple days, it's been grudgingly moving lower. And I had a short position coming in today. We had our stop lowered, and I said to subscribers last night, I said, be really careful with this stock, because all the gold miners, all the GDX has been super weak, up till today, of course. It's been basically in a downtrend this year, the GDX. But for some reason, this NG has been resilient. It hasn't broken down. And if it's, so yesterday it broke a new low, and I was short it. It seemed like the obvious thing to do. I saw a lot of people on Twitter were short it, and that it was the obvious thing to do. The difference is are you managing the risk properly? Because from these failed breakdowns where they suck the shorts in, they get a lot of nervous longs out, come these fast moves because there's really just a lack of supply. Basically people have been worn out of this stock, and the shorts look to cover, and then momentum buyers get involved, and you get these violent moves in the opposite direction. So from this failed breakdown yesterday, we had a 7% rally in NG today. So the point I'm trying to make here is, in PWER, it seemed obvious, with big revenues, a nice looking chart, a big short position. It seemed obvious that the stock was gonna break out, but it failed to follow through. So when the price tells you that the story might be good, but again, only price pays. The short interest doesn't pay you, unless those people are motivated somehow to repurchase their shares. But you just have to get the heck out of the way when the market. You have to listen to the message of the market. You can't listen to whatever the news is or whatever. You have to focus your attention on the price action. Let's check in, by the way, just again on Netflix and see what that thing's doing here after the close. So we got it up at 195 now. So a lot of people were talking bearish, have been talking bearish about this stock for a while, and they're getting they're getting punched in the face right now. So we're up, we're north of this range right now. We're right at, we're actually right at the high end of it. Basically, we're right at the high end of that range. So we tested the range in here over the last 2 months, and here we are trading at 196. So it's not going to be Netflix that the short sellers can look to say, hey, this market's done with. Let's see, are the Qs? They're not active here. So anyways, that's a look at the market. Well, some of the other things, what were the other things I wanted to talk about? I think that the GDX, I think it's a bounce within a downtrend. You get some of the most violent bounces within a downtrend, and maybe it continues up towards its 20-day moving average or so, but some of the largest rallies actually come in downtrends, and look where it came from, right near that 200-day moving average and this prior important level. Now, had you bought because you thought this prior resistance and support was going to be support again at the 200-day moving average, you had a couple days of pain in there, but today, obviously, it bounced nicely. It's above that 5-day moving average, and it looks like a counter trend bounce to me. In other words, just like these, short-term sell-offs in the SPY and the Qs have been counter trend sell-offs. That's nothing more than that, which is why it's important to stick to the primary trend. Some others, let's see, take a look at. I was going to talk about a couple stocks here. I wanted to talk about. Actually, I had mentioned this the other day. How Soda. And CLNE kind of looked similar. I was telling subscribers last night there was another one that looked like that. But Soda, what we had happen in Soda was this was a big successful IPO, and then it broke down through some support. Got a lot of people, again, same type of thing, from this failed breakdown at this 28.5 area, or I'm sorry, 29, 29.5 level. From that failed breakdown, it rallied back up into that, trapped in some shorts, got rid of the weak longs basically, and I consider myself one of those weak longs if I'm in it. But from that failed move came this fast, violent move higher, and I was thinking maybe CLNE could do that as well, but CLNE really needs to clear back above, and I'd say close above 1350 if that's going to happen. But another one that I mentioned last night that looks kind of similar is another IPO is MOTR, which is Motor City. And Motor City, if we take a look at, for instance, just some Fibonacci, it came down to almost precisely the 61.8% retracement of this big uptrend, and then it broke this support it broke this support, came down to 61.8% retracement, and I said we wanted to keep an eye on this one. It was too early to buy, I thought, yesterday, and I still would have stuck with that because we were at the declining 5-day moving average, and the stock gapped higher. But I think that this stock has the potential that if it doesn't, so for today, it held above the volume weighted average price for today. It absorbed that gap. If it can probably hold above today's low, a stock like MOTR has the possibility of making a move maybe up towards 22.5. I mean, these little recent IPOs that trade some pretty heavy volume really can't trade some big volume, volatility, and it wouldn't surprise me to see it up towards that 22 level. I own a little bit, and might add to it. We'll see if the if the risk seems proper or not in there. But those are just a couple ideas to look at. That's going to do it for today. Thanks for tuning in. Sorry about the technical difficulties that held us up earlier.